Welcome to ISE's ETF and Index Weekly Outlook, a weekly outlook on ETFs and ISE's indexes, hosted by Patrick Ceresna, the Chief Derivative Market Strategist at OptionSource.net. ISE has a portfolio of more than 20 proprietary indexes based on a diverse range of fast-growing industries and emerging markets. Our team of indexing experts is dedicated to creating these innovative indexes and partnering with issuers to launch unique investment vehicles. This includes exchange-traded funds, exchange-traded notes, and other structured products. ISE continually enhances its trading platform and develops new index products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE ETF and Index Outlook for March 5th, 2012. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. We made the observation that there was substantial overhead resistance around the 135 to 137 level, but there was room for extended moves that could even go as high as the 140 level on the SPDR S&P 500 before the corrective pattern could get underway. One way or another, we are anticipating there to be a market correction. We don't believe at this juncture that this will be anything that resembles a crash or a major shorting opportunity, rather a much needed break from a pretty solid almost 60-day advance. At this stage, when that corrective pattern does occur, it could potentially go as low as the 132 level. That would be our first downside target. And a much deeper corrective pattern could go as low as the 127 to 129, but we don't give it a very high probability that a corrective move will go that low. Our initial buy levels are going to be right around the 132 level. This week I wanted to take a look at the ISE Natural Gas Index, which is symbol FUM. There are a number of ETF products that trade based on that index. We were about 2-3 weeks ago suggesting that there was some substantial overhead resistance along the 120 to 123 line, and that even if natural gas was to strengthen that high, that it would reject. Well, it just made it just under the 120 level before we saw those reversal patterns. This is a very interesting moment in natural gas because really either A, it's going to stay distinctly range bound, which means it's going to trade all the way down to its previous lows along the 104 to 106 level. But in the same regard, if for whatever reason we were able to hold solidly above the 110 area, let's say even the 111 to 113 area, and we see no substantial follow-through selling, then any reversal off of those mid-tier levels could actually have a push, a very bullish push above 120. So we're going to be seeing where the selling is contained to. It is not really bullish if it makes it all the way back down to that 104, 106, but if it stops anywhere earlier, it could be a bullish indication. Next year I want to take a look at the ISE Global Copper Index, which is the symbol ISC. And really copper has now come up for a second full retest of this 420 to 440 level on the upside, creating what could be potentially a double top. It is far too early in the pattern to be able to make that kind of an observation, but corresponding with our intermarket analytics, we feel that it's an above average amount of probability that this is a pattern that could develop here. So we're going to be observing the neckline lies along the 400 level where the low from a couple weeks ago occurred. If we, for whatever reason, in the upcoming week or two saw any substantial weakness below the 400 level, it would be an indication that a short-term topping could have actually occurred, and we would then be looking at more aggressively shorting copper. But again, it's too early at this juncture, but it's worth the observation to watch whether or not that pattern develops. Finally, I want to take a look at the ISE Water Index, which is symbol HHO, and we're suggesting that this 93, 94 level was going to act as an overhead resistance, and that we were anticipating this kind of a pullback off of those highs. Now, this is again a very similar situation where to the other indices we were looking at. It's during this pullback that we want to see almost all the selling contained, let's say around that 88 level. A much deeper pullback could go go as low as the 84 to 86 level. But nonetheless, the more shallow the sell-off, the better. And essentially, at some point over the next couple of weeks, the water index, so long as the price action develops properly, should emerge as a buying opportunity into this weakness. That was your ISE ETF and Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free ETF and index trade alerts, visit www.optionsource.net. To learn more about ISE's indexes and ETFs, visit us at www.ise.com/ETF.